What I'm basically implying here is that I think the West, I hate to use the word silver squeeze, but that's almost as if what it appears is happening. When you have countries like India and China massively accumulating silver, where the rumors are China's telling its populace to start to buy silver, where India is buying it hand over fist, and the amount of available silver for delivery is way, way, way under what the completely and totally rehypothecated LBMA and COMEX have sold, which are, promises to deliver. It's setting up for a massive silver squeeze. And maybe, just maybe, this is why you have these four big cartel bullion banks who are notoriously known to be short, coming over with hat in hand in the Shanghai Metals Exchange 4 weeks in a row. Maybe that's what this is talking about. The bottom line is, to me, silver represents the best, most undervalued asset I've ever seen.
Andy Schectman highlights a looming silver short squeeze with some startling data. India has imported over 500 million ounces of silver in the past 2.5 years, while the COMEX holds only around 60 million ounces in its registered category. This significant disparity indicates a potential shortage, as the COMEX and LBMA have sold more silver than they can deliver. Major bullion banks, traditionally short on silver, are now seeking assistance from the Shanghai Metals Exchange. These banks' presence in Shanghai has coincided with a drop in silver inventories there, with silver prices on the Shanghai Metals Exchange nearly $4 higher per ounce than on the COMEX. There's a strong incentive for silver to flow eastward. Schectman believes these factors are setting the stage for a massive silver squeeze, presenting a unique undervalued investment opportunity.
There are a lot of very sophisticated people in finance that are very well read. They just read the wrong stuff. They should be listening to you, and maybe they would have a better understanding of what is actually happening. But the flow of gold and silver, this decades-long standing trend of the price of gold and silver being determined by the Western institutional investors, is breaking down. And again, I think the underestimating of the significance of this is a big, big mistake. And I think it will one that will wake up one morning. The West will wake up and say, what did we just allow happen? The prime example of it is the arbitrage on silver. You have a $4 increase on the Shanghai Metals Exchange over COMEX, real damn near $4 an ounce higher. So the arbitrage is real. Any metal that can be purchased in the West and delivered to the East will happen at that level. And I think it should be the opposite of that. We should be hanging on and accumulating whatever we can. Instead, we're sending it all that way. Well, you could also argue that, gold hasn't even gone any higher. It's the fact that the dollar is losing its value. The amount of money creation and inflation is destabilizing the value of everything, really, valued in dollars. And I just think people underestimate where gold will truly go, and what that means for the dollar. So yeah, be careful what you wish for. $2,400 on an inflation-adjusted value is still very, very low as to where it should be. Look at all of the distortions created in over the last 20 years in asset prices due to, suppressed interest rates and easy money. And a couple of the only assets that haven't been distorted to the upside have been gold and silver. Look at the Dow Jones, look at the NASDAQ, look at the S&P, look at all of these. Look at real estate market, look at the bond. All of these things have been distorted, everything, through suppression of interest rates. And that's the problem. The misallocations in resource and capital, the distortions in asset prices, price discovery. These things have all been distorted, yet you look at gold and silver and ask yourself, why the hell would there be 4 or 5 commercial banks that hold the largest short position in any commodity traded on the COMEX in silver? Now, there's a lot of talk going on right now about what is really happening with silver. But ask yourself, why the hell would they be short? To me, it's as dumb as a mud wall. And so when you look at real value, you could argue that the gold and silver are massively undervalued in comparison to things like the Dow Jones and the S&P and the handful of stocks holding it up. So I guess it's in the eyes of the beholder. But to me, even at gold at 2,400, it's undervalued as to where it really, truly should be. And I think people's idea of valuation are misplaced. Again, I will point to the fact that gold and silver are assets that have no counterparty liability. And the West has proven how dangerous it can be in holding traditional assets. They can be inflated upon, they can be defaulted upon, and they can be confiscated if we don't align ideologically. That's like sticking a knife into the heart of this country's trust globally. And you take a glass and throw it against the wall and break it into a million pieces. Putting that back together is not easy, if not impossible. And I think we've come damn near close to destroying our trust. And now if you talk about lowering rates and giving up on austerity, giving up on normalizing, I mean, we never will. We got 200 trillion, literally, in debt, both funded and unfunded. How do you ever normalize? I guess you probably won't, and we will do what all governments have done, and that's to choose inflation over austerity. But it's not going to end well. And this is the whole reason why the central banks, who not only are the wealthiest, but they're the most well-informed traders in the world, and they continue to buy gold because they see the handwriting on the wall, while the people in the West believe this could never happen to us. And that's the fatal flaw in all of this. You take a look at the LBMA, they'll tell you they have the first or second lowest amount of silver held on the London Bullion Market Association's platform in 140-year history. You look at the amount of silver that's been bled out of COMEX, it's massive. And it's interesting that when you talk about the Shanghai Metals Exchange, you can't export gold out of China unless you first take one of your bars and deposit it in the Shanghai Free Trade Zone or the Shanghai Metal Exchange. Then you can export it. But you can't really, in general, export gold, but you can export silver. And there's been all this talk recently of these traders showing up at the London Metals Exchange, the big bullion banks, right? And it's really interesting. So I started doing a little bit of digging on my own, and I found out that because 4 bullion banks showed up at the Shanghai Metals Exchange for 4 straight weeks, second week of March. And if you look at first it was the Deutsche Bank, then HSBC Bank, then JP Morgan, then Standard Chartered. Going back to the second week of March, and if you realize that silver can be exported out of China, but gold cannot. Look at the Shanghai Metal Exchange silver numbers since the second week in March, and they're going straight down like this. And I have to wonder if there's a coincidence. You go right to their website and you can see that these banks showed up. They're taking pictures of it. Why are the banks showing up in Shanghai, the banks that are largely short on COMEX and the LBMA? I'm going to talk about how short they are in a moment. But why are they showing up? And then all of a sudden, the silver inventories in Shanghai start to drop. Does it mean that they're caught? Are they trapped? And when I say that, look, as I mentioned, India's imported over 500 million ounces of silver in the last 2.5 years. COMEX only has about 60 million ounces in the registered category, backing the bars. So you're talking 9 times as much has been imported by India in the last 2.5 years as COMEX has, period. And yet it is estimated that the contracts in the registered category are rehypothecated or resold at 1,600% or more. So 16 people hold the same contract. Good luck trying to stand for delivery. When you talk about the LBMA, that's a whole different animal all to itself. And you have basically all the big bullion banks at the LBMA, right? And so the LBMA tells us that they have 800 million ounces of silver in on their platform, of which 500 million belongs to the ETFs. So that leaves 300 million ounces. So between the registered category on COMEX and the 300 million ounces there, you got 340 million ounces. And you could even throw some of the registered or the eligible category on COMEX into the mix. So say they got 400 million ounces, whatever that is. The LBMA right now is trading, at least what they tell us, 292 million ounces of silver per day, right? But it's interesting when you realize that they've admitted that, and so have the bullion banks, largely in a survey that was done, I don't know how many years ago, that polled the bullion banks, that actually the numbers, the settlement numbers that the LBMA talks about is actually 10 times the volume they say. Because basically what happens is if I sell you 10 contracts and I buy 5, the net result is +5. They'll only count the 5, not the 15. So if you realize that the LBMA admits that they're actually trading 10 times more than they're posting, that would mean they're trading 2,900,000,000 ounces of silver per day, or 3.5 times the global mine production per day. Now, when you realize they're at their lowest level ever and the COMEX has bled down, what the hell are these 4 banks showing up for in Shanghai if you can't export gold, but you can export silver? Does that mean they're trapped? They went there and asking for some help, a little quid pro quo. Look at the numbers on Shanghai. They're falling since the first day they showed up there. And what I'm basically getting at is that permitting all of these paper claims to be created on the same amount of silver has allowed the pace of silver to be managed. And I think they're trapped. I really, truly do believe that they are trapped. And Shanghai's not making it easy for them. $4 premium on the Shanghai Metals Exchange. It started at 2, then 2.5, then 3, then 3.5, and now we're damn near $4. They are incentivizing all of the silver that can be sent east. They're incentivizing. Now, they are giving up some to the west, but what did they have to do? It appears that way. What did they have to give up to do that? What are they getting to do that, rather? What did the West have to give up to do that? And I think that the bottom line here is that these banks are naked short massive amounts of silver. And I think they're realizing that it's becoming harder and harder to get silver, and being naked short to that degree, millions and millions and millions of ounces, is detrimental. I will ask everyone to go back and listen to Chris Marcus's podcast, Arcadia Economics with Bart Chilton, where Bart Chilton admits all of this stuff happened with Bear Stearns and JP Morgan, says that this all happened first time ever. He admits it publicly, and then he dies a week or two later. Now, I'm not saying there's a correlation there, but I'm simply saying it's vindication for all us people who say this stuff happens. The head of the former CFTC, or the former head of the CFTC, Bart Chilton, admits this stuff is happening. And what I'm basically implying here is that I think the West, I hate to use the word silver squeeze, but that's almost as if what it appears is happening. When you have countries like India and China massively accumulating silver, where the rumors are China's telling its populace to start to buy silver, where India is buying it hand over fist, and the amount of available silver for delivery is way, way, way under what the completely and totally rehypothecated LBMA and COMEX have sold, which are, promises to deliver. It's setting up for a massive silver squeeze. And maybe, just maybe, this is why you have these 4 big cartel bullion banks who are notoriously known to be short, coming over with hat in hand in the Shanghai Metals Exchange 4 weeks in a row. Maybe that's what this is talking about. The bottom line is, to me, silver represents the best, most undervalued opportunity, asset I've ever seen.
That's a wrap on today's analysis of the potential silver short squeeze. Let's recap the key points. Countries like India and China are aggressively accumulating silver, with India importing over 500 million ounces in just 2.5 years. The COMEX holds only about 60 million ounces in its registered category, highlighting a significant potential shortage. Major bullion banks traditionally short on silver are now seeking assistance from the Shanghai Metals Exchange, where silver inventories are notably declining. The price of silver on the Shanghai Metals Exchange is nearly $4 higher per ounce than on the COMEX, incentivizing the eastward flow of silver. Andy Schectman believes these factors are setting the stage for a massive silver squeeze, presenting a unique and undervalued investment opportunity. Thank you for watching. If you found this video insightful, please give it a thumbs up, share it with your friends, and don't forget to subscribe to our channel for more in-depth analyses. We'd love to hear your thoughts, so leave your comments below.